So the last time when QE started was in end of the crisis, in December 2009. Gold basically from the bottom, I think it was about November 2009, to the peak in 2011, gold jumped 250%. Because of printing of money. So I think a lot of people may be thinking, well, this time around, a lot more money has been printed. Will gold jump even more? Well, I think we can use it as a gauge. Last time this happened, this was a consequence. This time this happened, will the same consequence happen? But we've got to understand what's the underlying reason of gold. What is the purpose of gold? Okay, one of the primary driver of gold price, I mean there are others as well, but I say one of the primary one is real interest rates. Real interest rates means our interest rate that we are seeing minus away inflation. So when inflation is so when real interest rate is low, gold will actually do very well. Why is that so? Because the competing asset of gold is cash. The cash that we're all holding, putting in the bank. When interest rate is very high, the opportunity cost of holding gold is very high because gold don't pay interest. While if I hold real cash, fiat money, I get interest. So if interest rate is 5%, 10% today, I won't want to hold gold because I get 5-10% putting my money in the bank. But if interest rate is low and inflation is high, because gold is a form of currency that's limited in supply, whereas fiat currency, nowadays, government can print at will. So let's say in the times of inflation, when inflation is higher than interest rates, then gold will be very valuable because gold can hedge against inflation. So I said that is one of the primary function of gold, other than a safe haven asset. So I think we got to really see then with this interest rate. I think we are quite clear. I think we are going to have a low interest rate period for quite a long while. Okay, the second question, which is still unknown, how about inflation? Because last time when money was printed, I think there was expectation that inflation is going to fly, and hence people buy gold. But this time round, I said it's still good to hold gold. That could still happen because interest rates already rock bottom. Because if you are in a deflation period, then gold may not be doing so well. So I say at the current juncture, I still think gold is a good hold. Because as a safe haven assets, if things turn south, gold could be holding up. And usually I say with more money is being printed, there may be fear of inflation, and gold could be at a hedge. So I said really be balanced. I would say where I would like to be in is structural growth companies. That would be great. Some of the mature and stable companies that give us a dividend yield, some gold and some cash. Let's not just take 08 situation or 09 to 2011 situation, as a repeat, but rather keep some gold. But don't in investment is like that. Let's not bet everything on one area. The environment can change, and hence if we are too fixed on our idea that this will be good, and we are all in, we may not be able to get out. Probably 10-15% or 20% of gold seems quite a good amount that is allocation at this moment.